What's good, everybody? What I'm going to be showing you guys, I'm basically getting ready for New York session. Um, so for New York session, we're going to be looking at the market, something that's called XAUUSD. In other words, which stands for gold. And within this market, last night at about I would say about London session around 4 a.m. I actually caught this trade right here on London session on this sell. And basically what I did was I used these rules right here. Um, and I'm going to explain why I essentially took this trade and why it honestly made sense. You know, it was a little bit early. It's a little bit still early in the week. I usually trade about like Tuesday mornings. That's probably when the first time I come to the chart. But this was just giving, too good of a setup. And I could have got my entry higher, but I actually hesitated on it because I was waiting for, Tokyo session and stuff like that to start, right? So the first thing that we want to do is, all right, within our strategy, all right. The first thing we want to do within our strategy, we want to build a daily bias, all right? So we want to actually go ahead and build a daily bias. So what does that mean? That means that once we come to the chart, so just how I came to the chart and went live at 8:30, okay? When I come to the chart, I need to basically prepare myself and think like, okay, what essentially am I going to be looking for today? Is the market showing me bearish signs? Bearish signs, if the market showing me bullish signs, so on and so forth. Morning, bro. I gotta start waking up for London session. Or I said it yesterday. Yeah, bro. Honestly, it was a play. Yeah, no cap. I honestly literally just woke up randomly. So like for this trade, bro, I was knocked out. And then I just woke up literally around London session like 3 o'clock. And I just seen this entry presenting itself. So I'm like, yo, let me just try it and see what happened. And it actually went ahead and played out. I risked $688 and I actually made more than this. So I made around 1900. So it was almost a 1 to 3 risk to reward trade. All right. But the reason why I was so confident in this trade is because of my daily bias. So I know that gold has been dropping, right? So even if I go to the 4 hour time frame, right, at this particular moment when I enter the trade, let's see. At this particular moment when I enter the trade, as you can see, the market was below, the price was below the 50 EMA and the 200 EMA. So if you look at my rules right here, it says for bearish trend, price below both EMAs, okay, and you can see price was below the 50 EMA and it was below the 200 EMA. As you can see right here, so the 50 EMA is blue, the 200 EMA is red, and how you can actually go ahead and add it is literally on TradingView. You go to indicators and then make sure that it's exponential moving averages. Oh, my computer moving slow right now, man. Yup, relative strength index, and then it'll be exponential. No, not relative strength index. It'll be exponential EMA. So let's take a look, right? So for bearish price, it's either the 50 EMA is below the 200 or price is below both, right? And we have the blue, which is the 50 EMA, is under this 200 EMA. You can see it crossed all the way back here. So it's been going down for some time now. So the 200 EMA crossed all the way back here. So you see the EMA crossed all the way down there. So now I know is that basically I should be looking for sells. no matter what. So I should be looking to take sales within the market. All right. And we only want to really trade in the direction of the 4-hour trend, which is sell. So that's essentially why I took that sell position. Within obviously within it, there'll be some buy opportunities and things like that. But with the buy opportunities in the selling market in the downtrend, it's a little bit more risky. All right, it's a little bit more risky. So how I was able to basically catch that sell is, like I said, for my rules, right? For the bearish trend, the price below both EMAs, the 50 and the 200, or the 50 EMA below the 200, and you only trade in the direction of the 4-hour time frame. So you can see, as I just marked up, that 4-hour crossed back in March. Right, that crossed back in March. So gold has been dropping ever since. And look, the blue never essentially crossed back over yet. It's been trading along these lines. And these EMAs in certain scenarios, in certain situations, right? I wouldn't say you can essentially trade off of them. Like, I wouldn't enter off of the EMA, right? This is just to guide you to see what the trend is. So let's say, even for example, over here, you can see, let's say when gold was going up this whole amount of time, early in the year, you can see this 50 blue EMA is above the 200 the whole time. And you can see it's kind of like testing it, bouncing off of it, if this makes sense, like rejecting off of it, using it as like a support and resistance and stuff like that. But this EMA is for strictly, for me, the EMA is strictly to find the trend. I don't enter off of it. I don't take trades off of it, right? Like I said, this right here is the first step that you need to do, right? You need to get a directional bias within the market. So next time the EMA cross, could it indicate the market's changing? Yes. So if this 4 hours, so right now you can see, all right, just to show you guys, just to give you guys a little more explanation and explain that question, right? So like I said, this is gold. So if you want to be realistic, all right, there's 3 different types of markets, all right? So there's, right, and this, I know some people already know this, but it's good to always refresh. You feel me? 3 different types of markets, even for people that's new. Right, it's 3 different types of markets, right? We have bullish, which equals buy. We have bearish, which equals sell. Then we have consolidation, which is sideways. All right. So, like I said, the first thing we'll do is get directional bias. So, realistically, if you look, this is basically low-key consolidating, right? It's moving sideways. It's not really going like this, right? Right, for right now. Like, for right now, for where price is, right? This is basically can be considered consolidation. But it's trying to, it made this low right here. It made another low. So, it could be possibly attempting to go down. So the next time the EMA cross, so if this blue EMA, which is the 50, if it crosses the 200, right, now we're going to start looking for buys based off of, right, these key levels, right, the quarter point levels. So this is all just basically helping you build your case and creating confluence in the market, right? So by basically creating confluence in the market, this will make your trade that you're essentially entering more high probability, right? So for right now, we want to be looking for sells because this 50 EMA is below this red, and you can see price is also below. All right, price is also below both of the EMAs. So that's one confirmation that, all right, we're looking for sells. All right, so now the next thing you want to do is you want to actually mark your quarter point level. So the reason why I don't leave these on my charts, like I said, this is just to find the direction of the market. So you can see the market is going down. EMA cross, right? And price is below both of them. So this gives me a scenario where if I do enter a sell, okay, it will be more so higher probability for the simple fact that I'm going with the trend. So yes, you're still going to be able to catch buys. So you can see this would be a buy, this would be a buy, this would be a buy. But essentially, it's going against the trend. You get what I'm saying? And I'm not saying that these buys going against the trend won't play out. There are times where it will play out, but there's going to be more than likely or not that it won't, because the trend overall direction is bearish, if that makes sense. So now I don't like leaving these on my chart because you don't want to see them on a smaller time frame. It's only for the 4 hour to basically determine the trend. All right, so now the next thing we want to do is you want to basically go ahead and add and make sure you have you want to make sure you have your Lux Algo sessions indicator on. All right, if you don't already. So basically with the Lux sessions algorithm indicator, what it does is it tells you, and if you see these colors, it tells you all the different times and stuff like that. The market, New York session, London, Tokyo. So you can see this session that I caught was kind of Tokyo and London session overlap. Okay, and then Tokyo session ended, and then London session continued. All right, so so now when I came to the chart, right, one thing that I learned is that the best time to really trade a pair is when the new session and stuff like that opens, to see what it shows you and see how it's reacting. All right, so I'm like, all right, cool. I really wanted to catch the sell right here at first in Tokyo session, but I kind of hesitated. Like this right here, I could have caught 500 pips, but I caught like around 200 instead. I want to catch this entry first, but I essentially missed it. So what you want to do is, all right, you see the market dropped, right? Came under this level, tap, 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 right? So now I waited for London session to kick in, which is obviously starts at 3 a.m. Eastern Standard Time. So like I said, I just happened to wake up because I planned on waking up for London session anyway, but I didn't have an alarm or anything. I'm like, yo, if I wake up, I wake up. If I stay up, I stay up, so on and so forth. So now what you want to do is after you mark up your quarter levels. So what quarter levels are, quarter levels basically consist of, okay, every $25 marked up in the gold market. Okay, so what I learned and tend to notice that gold reacts off of these quarter point levels within the market. And within these quarter point levels, every single one of them are measured $25. So for instance, right, my entry point that I took was based off the 4,050 quarter point level. And you can see how it actually literally rejected this area, boom, and it went down. And take profit, it's always take profit one, it's always going to be at least the next quarter point. So you can see it came down to this take profit, was tired, right? So what I did was I built my directional bias, right? So sells, sells, sells. I'm looking for sells, but now I just need an entry point. All right, I just need to see where I need to enter the market, and I just need to see some kind of confirmation that can help me and give me the confidence to execute. So, right, that leads to step 4. So for step 4 is, right, you want to wait for price to reach a quarter point level on the 15 minute. So right now, as you can see, I'm on the 15-minute time frame. So what that means is every candlestick that you see, every red one, every green one, that is basically measured in 15 minutes of price. All right, 15 minutes of price. So after I did my step 1, step 2, finding the trend, step 3, marking my quarter point levels, okay? And after I marked my quarter point levels, I had this level that I was interested in right here, which is 4,050, right? So now for 4,050, if you, like I said, if you don't know what quarter point level is, I'm going to say it one more time. It's for gold. It's marked up every $25. So let's say this right here is 4,050. This is 4,025, 4,000, so on and so forth. And you're able to see how the market rejects and reacts off of these certain levels within the market, and how you can use the levels also as take profits and stop losses, or essentially just using structure as stop loss, whatever the case may be, which is kind of what I did right here. So now for step 4, now I did everything right, right? I did step 1 right. Boom. I looked, all right, looked at the, basically build my bias. So my bias was bearish, okay? Step 2, I used my 50 and 200 EMA to identify the trend within the market, right? Within this 4-hour trend. So, like I said, the EMA is just to help me identify the trend. I don't trade off of it, whatever the case may be, right? So now, what happened was, like I said, the price, right? The 50 EMA and the 200 EMA, the 50 was crossed below, right? As you can see, crossed below the 200, and price was definitely both below the 50 and the 200. So it checked off. So you can see I'm going down my checklist. Step 1, I checked off. Step 2, it checked off because now I know, all right, it's confirmed. I'm looking for sales, right? Step 3 is marking my quarter point levels, which I have right here, right? Which is every $25. Then now step 4 is the most important part, is the execution part, because now if we don't execute, right, we don't make money. So you can, like I said, you can do all of these steps, 1, 2, 3, 1 to 3. You can do them perfectly. You can have them down to the T. But the 4th step is the most important step, because this is what's going to determine whether you win or lose money. All right. This is going to determine that if you're going to be confident and take the trade, or you're just going to let it go. So for instance, this right here, I seen this. You can see we have a break of this level. And like I said, I'm already looking for sales. So it came back, even tested this 40.75 level, and then look what happened right after, right? And I just watched this whole entire thing. You get what I'm saying? Like, I watched this whole entire thing, and I'm like, why am I essentially hesitating and not executing, right? And one reason why I was hesitating and not executing, because this is kind of out of my trading time. So you can see this blank area. This is where the market is just opening. Like, it's just opening because it closes at 5 p.m. Eastern Standard Time, and it opens back up at 6 p.m. Eastern Standard Time. So it closes for an hour, and then price just, does what it do. So I'm like, all right, I'm going to wait for Tokyo. So now off Tokyo, what happened? The volume just kicked in, and it just went down. So I'm like, all right, cool. Instead of me trying to sell down here, 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 it's like, all right, now I essentially missed this Tokyo move, which is cool, right? And this is, like I said, step 4, I failed, right? For this setup, I failed because I didn't execute step 4. I did everything else right. But think about it. None of this mattered because I hesitated and didn't enter this right here. So now I would have been able to, instead of just taking this from here to there, I would have been able to call it from here to here, which would have been about 500 pips. And with the lot size that I had a standard lot size, that would have probably been about like $5,000, right? But I hesitated. But it's not the end all be all, right? So now it's like, all right, I see it go down. And like I said, I fell asleep, and literally I just woke up at around because you can see I woke up probably around like 3, like right here, like 3:30. Woke up about 3:30 a.m. and I seen this. I'm like, oh shoot. I see how it's essentially rejecting off of these levels. All right. So for step 4 is you want to wait for price to reach a quarter point level on a 15-minute time frame, which is what I am right now. For a buy, right, we want to wait for price to trade below the quarter point level and then close above it, right? But for a sell, we want to wait for price to trade above the quarter point level, then close back below it. All right. So I'm just going to show you guys essentially where the entry is. Right. So now, in order to identify the right and perfect entry and the perfect signal, okay, you need to know and learn something that's called rejection candlesticks. All right. rejection. And if you haven't already, you can join my free Telegram community. I will send, and I've sent it before. It's a picture of what you should be looking for when it comes to rejection candlesticks. All right. So you're gonna look for rejection slash rejection candle. Always do that, fam. Rejection candle. All right. So we want to look for rejection slash rejection candlesticks, okay, at the quarter point levels, if that makes sense. So it's kind of like, like for the rules, I try to make it simpler. So it's like I put like price goes below it, right? And then reclaims the level and closes back above it, or whatever the case may be. It's basically, in other words, called a liquidity sweep, right? That's basically essentially what that is. It want to take people out the market before going in direction. I'm going to show you guys, right? So you want to wait for rejection or rejection candlestick in the market. So what does that look like? I'm just going to show you guys a little image right here. All right, so this should be able to help you guys with how you actually spot the entries. All right, I'm gonna just clean this up a little bit more. I'll say, okay, so this is for all tied into for step 4, right? So rejection and rejection candlestick. So you can see is, let's say we're looking for sales in this scenario, right? You can, so the market will go up to a quarter point level, right? Trade above the quarter point level, right? And then the next candle, 15-minute candle that I'll open up, will come back and close back below it, right? Close back below it. So then now usually you might have a wick here. Right? Something like this. So now, if we look to the real actual live market where I actually took this trade, you can see the same image that I'm showing right here. It's kind of right here. So you can see market came up to this level, the next 15-minute rejected. Came up to the level again, traded above it, rejected, right? Went down. Even gave a liquidity sweep, which is this wick right here, right? So anybody that was entered right here that might have had their stop losses right here, they probably entered, put their stop losses above here, all got taken out, right? Because the market does not want you to win. So what it's going to do is it's going to trade above the quarter level to basically sweep liquidity, sweep everybody else. So there's people that bought here, their stop losses are above, boom, take everybody out. Then now it's going to come back and retest. So look, this is the area right here. Come back and retest the area in this particular level. And then boom, you can see how price reacted and dropped. All right. So rejection candlesticks on and at certain quarter point levels. So you can see we have one right here. And this just happens at a variety of different times in the market. But it's just all about, and it all depends on what is more comfortable for you. So like I said, sometimes there'll be plays and there'll be trades in Tokyo session. Sometimes there'll be trades in London session. Sometimes there'll be trades in New York, right? It just all depends on, what works best for you. You're able to, with gold, you're able to trade in all three of these different markets, right? But, to me personally, I feel like Tuesdays, so like let's say today, Monday, um, I feel like today, Monday is really, I mean Tuesday mornings is really the most ideal to come to the market. So like right now, so even though I took this like Tuesday London session, I feel like Monday is like the best time because realistically, this is what happened so far in the week. And you can see it's like, all right, the market is doing its thing, it's playing out, so on and so forth, or whatever the case may be. So if you look at this is something similar to this, right? Because you can see the rejections that are happening at the quarter point level, right? You can see these green candles. So you can see I drew this green candle right here. Might not look the best, but right? I drew this green candle right here. So what will happen is you'll see if you're looking for sells in the market, and I'm not gonna buy right here because I told you what I showed you guys and told you guys earlier, right? I went through my step one, step two, right? And all roads were leading for me to catch a sell in the market. But now all I needed, right, was to identify my quarter point level and then now wait for price to trade above the level. So you can see it traded above. It even created this wick right here that you can see I did right here. So this was basically like a liquidity sweep. So a liquidity sweep is basically like the institutions trying to take out like basically like the little traders like me. So if you guys don't know what the institution is, it's like banks. So how and why price is moving not only is us, but banks are actually trading in this market. So I'm about to give you guys some souls, all right? So for everybody that's tuned in, right? So when it comes to the foreign exchange market and stuff like that, if you didn't know already, the banks are probably the biggest, if not they are the biggest participants in the market. All right, for the simple fact that think about it, they have basically the most money. They have all the money. So right now, let's say you have $1,000 in your bank account, right? Let's say you have $1,000 in your bank account, or you have $1,000 in your savings. What the bank will do is, right? I want you guys to understand, like, once you start really like understanding money and knowing how money moves and knowing how money works, like, bro, not only will you make it, like, you'll just attract it. Like, you wouldn't have to run and go out to it, right? So basically within the trading market, whether it's stocks, crypto, they're starting to take over crypto now. They're trying to, but it's decentralized. But they're trying to buy up almost all the supply. So with stocks, cryptocurrencies, right? The banks, what they do is, if you have $1,000, let's say in savings account. So some people right here on us that's tuning in, right? Yeah, I might have a savings account. What they do is, right? You go in, you deposit that $1,000, right? And then on your bank app, right? It's a digital number that will say $1,000, right? So it's not real. Like if you really think about it, it's not real, right? Right? And me and my friends, we have this joke all the time that like money is fake. And it's for the simple fact that, bro, it's literally not real. Like it's just a number on the screen if you think about it, right? Because why is essentially a number on the screen? Because what they're doing is they're taking your money and trading it in these markets. So whenever you become big, right? Whenever anybody that's tuned into this, right, you're going to be successful and you're going to make a lot of money, right? Because you're taking the time to stay and listen to this when other people aren't. You feel what I'm saying? So when you're successful and you're making a lot of money, right? And let's say you have hundreds of $1,000s in your bank account after you learn and master this skill of trading, right? I want you to go to a bank branch and ask them, hey, I would like to withdraw $100,000. I bet you they tell you that you have to come back tomorrow. Why? Because the money is not really there. They're taking it and they're investing it to here to make more money, if that makes sense, right? And I'm not gonna say like, if you think about it, bro, the shit is smart. It's like, yo, we're gonna take all of the consumers' money that they think that they're banking with us, and we're gonna invest it to make even more money. So now we can open up more banks. We can have more sponsorships. We can have our names on stadiums. We can do all these different variety of different things. You feel what I'm saying? So what I learned also that what a lot of big time investors do is, and I'm not saying that you guys shouldn't do this, whatever the case may be, right? Sometimes they don't really hold that much money in their bank. Because, like I said, at the end of the year, you might get, 3%, a percentage on what you have in your savings. But think about it, right? If you was to invest yourself into the market, right, the opportunity and the possibilities is endless, right? Because think about it, your money is sitting in the bank. The bank is going to invest it into the market anyway. And then they're going to make majority of the money, and you're going to make 0.03%. But why not you make all of the money? You know what I'm saying? But all it really takes and all you really need is a strategy that you're comfortable with, right? A strategy that you're comfortable with, a routine that you're comfortable with. You know what I'm saying? You don't need to trade every trade. You don't need to trade every session. You just need something that's going to actually work for you. All right. So that's how I actually went ahead and entered that trade last night. So now we wait for the next trade, right? And the next trade, it might not be today. It might not be right now. It might not be tonight. It might be tomorrow or Thursday, right? But there's going to be a point in time where the market is always going to be able to provide you and show you opportunities that you're going to be able to capitalize off of. But you don't have to take every single one of them, if that makes sense. All right, we want to take the highest probability setup. So, like for me, this right here, high probability. We got the London session. We have everything, all of our steps checked off the boxes. We confirmed our trend. We built our buys. We seen the rejections off the quarter point levels. It swept up above the quarter point level, then came back and reclaimed it. Even tested one more time. So it just gave us, just gave me, multiple reasons to enter this trade, and I was actually glad that I was able to, go ahead and execute it. So now what I'm waiting on and what I'm doing is I'm waiting on my withdrawal. I put in withdrawal requests. So we're gonna see. I put in my withdrawal request at like 5 o'clock in the morning. So the broker so I basically use two brokers. So one broker that I use is Genesis FX, and Genesis FX is, to me, more beginner friendly because it has a lot of variety tools and stuff like that you're really able to use. So it journals your trades, it journals your P&L. Like it has a calendar in the back office where you can see what you made for the week, what you made for the month, the day, so on and so forth, all within the back office. And with Genesis FX, what you're actually going to do is you connect it to something that's called Trade Locker, and you're able to actually trade within the market. So right now on TraderView, this is not where I enter my trades. I either enter them on Trade Locker or something that's called MetaTrader 4 or MetaTrader 5. So for Genesis FX is what I recommend, not only just new individuals, but for those who are trying to like build accounts long term. So let's say you put 1,000 in there, you're trying to build it up to 50K, 100K. Definitely go with Genesis FX. For my other broker, I do not disclose it because the leverage is like 1 to 3,000 leverage, and like people will just start going crazy and doing what I did. So, right, I just have experience, so I know it. So there might be times in my community where you might see me send trades from Trade Locker, but then you might see me send trades from MetaTrader. And the ones from MetaTrader is a broker that I had since 2018 when I first started, that I still use to this day. But to me, Genesis FX, bro, what I learned is that it has way more resources, a lot of resources, very beginner friendly, and you get your withdrawals fast. So for me, for this broker that I use on MetaTrader 4, I put in my withdrawal like what? When did this trade finish? Like 6, like 5:30. Yeah, like 5:30, 6 o'clock. I put in my withdrawal, and it still has not come in. It's been about 4 hours. They make you wait like 24 hours. For Genesis FX, bro, I've had a withdrawal in like 30 minutes before, an hour, like hour max, stuff like that. So it's like there's different brokers for different preferences. You get what I'm saying? But for me, Genesis FX definitely the best one. If you don't have one, you can click the link in the description and create one. You can start taking trades with me for free by also joining the free Telegram community. All right. So now, all right, we went over all of that stuff. So now it's all right. What are we looking for right now at this particular moment? Okay, so now, boom, this trade is done. So now we don't dwell on it. We don't dwell on the past. Happened. Good trade. Now we move on. All right. Like I said, I'm waiting for my withdrawal. I actually withdrew my profit that I made, 1,900. You know, I'm gonna secure some profit and then leave 1,000. So when I withdraw this 1,900, I'm gonna have 1,000 in my account, and then I'm gonna flip that. Right. But like I said, for the next trade, I want to see what's gonna happen, and just like how I was patient and waited for this setup, because I just told you guys I seen this, but I'm like, yo, I'm gonna wait for when there's a session in play, right? Which came London session. So just how I was patient for this, we're gonna be patient for the next setup, all right? We're not gonna rush. We're gonna see if there's a setup in a trade that presents itself right now while I'm on this, right? I'll give it out. But if there isn't, then hey. So realistically, this is my thoughts on gold at this very particular moment. All right. So at this very particular moment, what I feel is going to happen with gold, and even on just adding a little confluence, right? It came back, retested. Let me change the color. All right, so this very particular moment of gold, what we have, okay, so like I said, I made almost $2,000 that last trade, but now what do we have, okay? So to me, I'm still looking for sells, all right? I'm still looking for sells. So around Wednesday going into Thursday is where we'll probably see a correction in the market. So around Wednesdays, like Wednesdays going into Thursday, is where you'll see some kind of like overall correction in the market. So just to give you guys an example, I'm gonna show you guys one example real quick, is that you can see last week, Monday, you can see Monday, Tuesday, Wednesday, the market went up, right? Then now, kind of Wednesday, you can see up here, this says Wednesday, Thursday. So like Wednesday afternoon / evening, going into Tokyo session, going into London, you have a reversal of the whole entire move that it made for the week, right? So this is just how gold moves, how it works. Don't ask me how do I know. I just learned this from somebody, all right, literally. And what I'm showing you guys, I actually paid $3,000 for it. So this whole strategy, everything that I'm showing, the quarter point levels, the rejection candles, all that stuff, I paid somebody $3,000 to learn that. And I'm giving y'all the source for free, man. So look, if you could just like this live, so you never know, could push it out to people. Feel me? Right? So, like I said, usually Wednesday going into that Thursday, you'll have a overall, basically, you know, it'll start to reverse on what it did earlier in the week. So right now we're early in the week. So so right now we're still early in the week. So you can see we're around this time frame as it was in last week, right? You can see it went up 1,000 pips. So now what I'm essentially seeing is for this week so far, right? It opened price this week opened right here, went up, and it started going down. So if this continues to go down, right, Wednesday is probably going to be the type of reversal or whatever the case may be. So after catching that trade, right, now the next thing you want to do is you want to be patient, right? I don't want to give the money back to the market. So the profit that I made, I requested a withdrawal, right? And the withdrawal was for whatever it said, $1,900 something dollars, whatever, 80 something dollars. And what I really want to do is I'm essentially probably want to wait until that withdrawal comes, because now I basically rinse and repeat the same exact steps. Okay, but for gold right now, there may be a setup approaching, right? So gold has been going down. So what happened was the market opened. So this was a gap. So it happened, it opened, gapped up, boom, came back to fill the gap. And like I said, we're still looking for sells. Boom, 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 right? And then now this just ties into structure. So now gold could potentially head down even more to this next quarter point, right? Because the market, it moves in waves. So you can see how this images, it moves in waves. So you'll see big movements, but it'll have to come back. It has to come back and breathe, all right, and retrace, right? So you can see it will make an impulse, pullback, impulse, pullback, impulse, pullback, impulse, pullback, impulse. Then now if I put this right here, you can see it will line up exactly. So for right now, right, what I did was just to confirm, right? Right now, I believe gold is going to eventually come back down and it's probably going to keep dropping, right? But now the thing is, where it gets tricky for people is that, all right, like I said, I know step one, I know step two, I know step three, I know that I'm looking for sells. The most important part, right, is step four. Is not, all right, where do I enter? Okay, where do I enter? How do I enter? And where and how I enter is, right, based on step four right here. So if we're looking for sells, price broke this level, now it's trading back above this level, right? Potentially, if it comes back to this 40.25, right, and it closes back below it, right, I might be able to take a sales position, right? I might be able to take a sell position. The stop loss would be above the high. Take profit one would be here. Take profit two, just like that, right? So there's a potential sell that could be loading up for gold, but it just all depends on if it wants to actually come back and reclaim this level right here. If it reclaims this level, respects this support, come back, reclaim this level, you can have some sell opportunities, right? And what I mean by reclaim this level, price trades above the QL, then closes back below it, right? So you can see we have this impulse. So now it's making a correction, which means it's trading above it. New York sessions opened and started about 22 minutes ago. So now we just want to be patient and wait and see what happens, right? This candle right here, this could flip bearish and close below it, right? But we don't know. So we want to wait for, right, closes. So for me, when I enter the market, when I enter the charts, right, I wait for candle closes, right, for 15-minute candle closes. And once that 15-minute candle closes and reclaims, if it does decide to reclaim this level, right, let's say this essentially flips, or the next 15 minutes decides to come down and closes below this level, right? We could potentially get a sell opportunity where it will come back, drop, whatever the case may be, off of this quarter point level, which is 40.25. All right. So that's one scenario that can happen with gold. All right. So now what you want to do is, you want to, like I said, you want to build your case. So I already did step 1, step 2, step 3. I'm looking for sells. Right. Even for my daily bias, right? For bearish, price is below the daily open. So the daily open is right here. So one confirmation, price is below the daily open. So now I know that I should be, price might be bearish. Step 2, let's see again, right? I'm gonna go through these steps with you guys one more time. Step 2, right? We add our 50 and 200 EMA to determine the trend that is happening in the market based off the 4-hour time frame. All right. So now, what does the rule say? For step 2, confirm the trend. Use the 50 and 200 EMA. For a bullish trend, price above both EMAs, okay, or the 50 EMA is above the 200. For a bearish trend, price below both EMAs, or the 50 EMA is below the 200. So now we have the 50 EMA, which is the blue. I can already see it, is below the 200. And then we also have the current price, which is this green line that's going all the way across. You can see the price over here. That is also below the 50 and the 200. So what am I looking for? I'm looking for sells, right? I'm not looking for buys. Why would I be looking to buy? Doesn't make sense, right? Can a buy happen and work and play out? It's possible, but I'm going to feel more confident and more comfortable taking the sells in the direction of the trend. All right. So now for the third step, what we want to do is we want to mark our quarter point levels. All right. And like I said, I don't trade off of the EMA. So that's why I don't really leave them on my charts. I just add them to see where we at in the market. All right. Add your quarter point levels. So now my quarter point levels are added. So every $25, it's marked up on gold. So 4,050, 4,025, 4,000, so on and so forth. So you'll have to mark up your quarter levels, you'll have to probably do it yourself. Basically you can use this horizontal ray, you can use a horizontal line. When I first started, I was using a horizontal line. So this indicator is, I got this from the person that I bought the course off of. So it came with it. So it's not access to, everybody. It won't even let me give it to y'all because I had to get access for it. Simple trading concepts. Thank you for this education. For sure, bro. Sure, simple trading concepts. So like I said, I just ran through those 3 steps. Now the 4th step, the most important one, which allowed me to execute right here. Right, simple. Like it's simple. Like once you really able to identify and see the rejections that happen in the market, like things will be like everything will start to click. Like, and it's crazy. What I essentially did was, I've been trading and stuff like that. Give you guys sauce and people who've been tuning in, popping in, out, whatever the case may be. But I feel like I never wrote my rules down. And I literally had ChatGPT write my rules down for me, bro. And it's like, I don't know, it's just fire. Like, so now it's like, I could just have my rules here. So it's like, I know that I'm breaking a rule if I'm looking for a buy, but everything is showing me a sell, step 1, step 2. And I'm looking at trying to enter a buy. It's like, you know what I'm saying? I could basically like snap out of it. Like, yo, why are you looking for buys on everything? Your rules is right here, right in front of you. So you can see, right? Like I said, for those still tuned in, like I said this 15-minute candle can basically, in other words, flip, right? It can flip. So right now it's 2 minutes on it. So it can come back and close below it, or we might have to wait. So this is why it's important to be patient. So like Mondays, to me, I don't really trade. It's a wash, right? So like I didn't trade none of this. I just let the market play. You gotta let You gotta let it play out. Like it's early. Like you're not gonna miss anything. So now, boom, I see this. I catch this trade. Boom, right? Even though I seen this entry, but it wasn't in any session. It wasn't in Tokyo. It wasn't in London. So I was iffy. So like if you iffy, bro, you might as well just not even trade into the trade. So I'm iffy. I'm like, yo, this is not even though like I'm seeing structure, like this is clearly like structure, like it broke below this low, like I'm seeing it, but I'm like, I'm a little iffy because if this would have came like in Tokyo yesterday, if this first candle would have came and swept up above this level and then came back and closed it, I would have felt more confident. But yeah, but what happened is London gave me that opportunity. Boom. So now New York might be trying to give that opportunity, right? So look, this is what I'm waiting for. Sell. This might happen, right? And will I take this? I don't know, y'all. I just made $2,000, right? So this is what you gotta start thinking too. So right, yo. So look, everybody that's tuned in, if you can, like this so we can push this out to more people. All right. And if you haven't already, join the free community. Link in the description of this. I give out free trades, and you're gonna be able to hop on these calls and trade with me every single day, and also take my trades. Also, if you don't have a broker account, you can do is you could click the link in the description. Also, create a broker account so then you could join the community and then start trading with me. Feel me? So think about it, right? On this, I already made this move was already plus. This move was already plus 19, 85 or something like that. So now, right, this move that I called from here to there was 1985. So now think about it. I have a decision to make. Because one, my withdrawal didn't go through yet. So let's see. I'm going to actually check. Let's see if it went through. I don't think it went through yet. Right? So that's why I'm saying Genesis FX is honestly better. So the broker y'all see me using is cool because I could risk more with less money. That's literally the perk of it. But like for somebody that's new starting, I don't recommend it. And for that the broker that I've used and made this on, bro, sometimes it takes like 24 hours to get your money. But like Genesis, you could get your money within an hour, bro. So I use both. Like when I'm feeling like doing a flip, I use my account on MetaTrader. When I'm building long term, I use my Genesis FX, bro, for real. But so now think about it with trading, and this is something that's called self-awareness, self-reflection that I had to do in my life, and especially when it came to trading. So think about it. I just made nearly $2,000 right within 2 hours last night. I probably slept about like 5 hours. So it's like, yo, I have to get a haircut today at 12. I gotta get my hair braided. That's why I got this bonnet on. So it's like, do I want the potential stress of entering another trade? Right? I could just take a nap right now and just call it a day. Or I could say, hey, everything is showing me the confirmation. Right? Everything is showing me what I need to see. Should I enter? Why not? So this is like some of the things that you're gonna be thinking about and emotions you're gonna be going through when you're trading, right? And I know for me, when I was starting and I would make money, for me, I'm waiting for the next trade like now. Like, bro, I'm trying to flip this. I just made 2,000. I'm trying to flip it to 5. I'm trying to flip it to 10, right? Especially if I always had a goal in mind. So throughout my journey and process, I'm like, 2 bands. Do I take it and then just call it a day? Or now, another scenario, what I could do is I can risk less. So now let's say, so for this trade right here, I risked 1,000. right? Around 500. No, I risked $600 this for this trade. So now, if I take this trade, maybe I risk 300. But even if I risk 600 again, I'll still be up 1300, right? But now it's like, all right, that's cool, but it is still only Tuesday. So now, probably Wednesday going into Thursday, how I showed y'all, might be a play over there. You feel me? Or I just take a little small trade here, you get what I'm saying? Right? Into a little 0.10, risk what? This would be like $150, right? Make me a couple hundred, but is it worth it? This is what you gotta think, right? About what your journey. So I believe that this is gonna happen though. I'm not even gonna lie. Like, but all we're waiting for is price to basically come back and reclaim and close below it. So like for me, I know there's some people that do use the same strategy that I'm actually like in a community with and stuff like that because I bought a course. I told y'all to learn this for 3,000, and sometimes they'll enter above. Like here, like once they get this first rejection, so you see this red candle right here, this rejection, they'll be like, yup, it's rejecting. And they'll start entering it. So sometimes they'll have better entries. But to me, like, it's like, I want to be patient, man. So like, I need to see this close back below this level. Like, if a 15-minute closes back below this level, I think I'm going to enter it. Right? I think I'm going to enter it. Because, like I said, if we look, like, everything is just, like, leading to it. So, like, this right here, rejected off this, come back, even this resistance right here, support. So, it's just, like, a certain amount of confluences that's happening within the market right now, within this chat, within this pair. But it is early, and like I said, I did just make 2,000 a couple hours ago. So it's like, hey, do I just walk away? Which I'm probably going to do. I'm not even gonna lie, because I don't really see anything happening. Let me see something. Let me look at news. I don't think there's any news today, but I know there's news. I think tomorrow morning. You're the GOAT, J Sharp. You're funny, bro. You're funny. Life of Manny. Life of Manny 111. So funny, man. Probably the funniest guy I ever met. Yo, my computer is freezing. Man, yo. And yo, just to also let you guys know that since this is like a live stream is on YouTube, I'm probably like a minute delayed. So you might see things delayed. Oh, my computer is slow, man. It's moving mad slow right now. Hold on, y'all. My shit is freezing. Oh, all right, good. All right, let's see. So right now I'm on Forex Factory. We gonna have some news for the week. Let's see. Wednesday, FOMC at 2:00. So by me knowing that FOMC, which is basically interest rates. So you can see this is the interest rates. The forecast 3.75%. Previous was 3.75%. So if the actual price of these interest rate comes out higher than 3.75%, it will be bad for USD. If it comes out lower, then it will be good. So why does that make sense and why does that matter? Because USD is in the pair that I trade. So look, I ain't gonna lie. All right. So this next 15 minute, if this close, if this close below this level right here, I'm entering. All right. If this close below right here, I'm entering. And look, you can see what I just said. I'm entering if it closed below. If it closed below this level, and we have 6 minutes, 6 minutes and 30 seconds. Hey, do I take it? This is gonna drop, fam. This has to. I ain't gonna lie, gang. If this don't drop, that'd be crazy. Hold on, I gotta reevaluate, reassess real quick, and yeah, this gotta drop, bro. Like, has to. Like that's what I'm saying. Like that's why I wanted this entry up here, bro. I knew it. Like I knew it. I baited, bro. I baited. I wanted that entry up here, up there. But even this entry still, I could have took some profit here and left a runner, but I just took my bread. So yeah. So like I say, y'all, I'm a little delayed. So give me 1 second. My computer is fucking moving slow, bro. All right, yo, look. Yo, this is gonna melt. Look, it might even leave like it might take off without like by the time the candle closed, like look the price is below on a 4 hour. Look, like this is just bearish, bro. Like look at this. Like this is gonna drop. Prices below, right? 50 and 200 already crossed. Prices below both. Like this is gonna drop, bro. I ain't gonna lie. I think. Yo, why is my computer loading up, gang? Yo, computer's tweaking. Yo, this is gonna fucking drop. Hold on. Alright. I'm actually gonna enter. Yo, even though I made 2,000, bro, I'm gonna enter. But I'm gonna enter light. I'm not gonna go crazy. Like, like I'm gonna enter more so not only just to make money, but to really see if what I just explained and broke down for whoever was tuned in. I literally just explained that this is what I'm looking for. So I might enter just to show y'all like that this shit work. But I'm doing it live. Feel me? So look, we got 4 minutes right here. So my stop loss will be above this high right here. So wherever it closed, you were more so really wanting to close more closer to the quarter point. And the thing is too, what I used to add into my thing is I used to be like wait for a close and then wait for a retest back of the zone. I mean of the level for it to drop. But the thing is, there's times where it won't retest. Like it will literally just leave, if that makes sense. So like, it's like, yo, all right, now it's like, yo, the retest is like, wait for retest is like now you're trying to be like really, really perfect, if that makes sense. Like you're trying to be real particular. So that's why I just like, yo, the close back below it instead of it close back below and then coming back and testing it. But which it tends to do. So you can see it did it here, it closed below, tested it, drop. Even right here, closed below, came back, tested it, drop. Closed below, came back, tested it, drop. So it's like, hey, that's what I actually might do. Instead of entering on a close, I might enter if it comes back and taps this area, right? If it taps it, maybe, I don't know. Let's see. All roads leading themselves. Okay. I ain't gonna. I ain't gonna. But yeah, yo, this might be a go. It's 3 minutes left, 2 minutes. Yo, I might be entering this, man. If we could get like this, I don't know. I don't know how much volume it's gonna give though. Like, I'm not saying that it can't get volume, but like for London and Tokyo session, it already went down like 500 pips. Like, let me see. From the daily open, it's down $54, which is 500 pips. That would mean see, so right here would be 1,500. Yeah, the market is flowing right now, bro. So if this on this close, probably gonna enter. If this close, this 15 minute and it closes below, probably gonna take a position. But I'm probably not gonna risk that much though, honestly. But even if I risk what I first risk, I'll still be profitable. So it all depends. Oh my god, my computer's freezing, bro. Yo, our Max ass. I guess Max or ass, bro. My shit be freezing. Oh, my shit might just be too old. Alright, so look. So for me, I don't think I'm entering this yet, bro. You see, it didn't close. Like, you see this little area right here? And I might be nitpicky, and I'm like, yo, this guy's nitpicking, bro. Like, it's literally right there. But look at this little space right here between this. Right, it didn't really close below. So, like, could I have entered in a sell, even though it didn't close below? Possibly. But I'm just trying to stick to my rules. You feel what I'm saying? Stick to my rules. Now, let's say this 15 minute, let's say it just drops and takes off. It's like, it's going to be like, damn, I could have caught a trade, but it's like, it won't make me feel as bad because I know that I stuck to my rules, if that makes sense. So, but I think I'm just going to wait or a little bit longer. I don't think it's not time. I don't think it's good to enter right now. I'm just waiting. Like, I think it might, I don't know. Yeah, it didn't close below it. So now I'm going to wait for this 15 minute. If this 15 minute close below, that's my confirmation for potential entry. But like, in order to see that, you will literally have to zoom in though. Like, I'm not particular when it comes to this shit. So like, so look at this shit. It closed, but it has still this area, this distance that it didn't close below. So now, can this just take off? Hell yeah, it could, but I'm cool. It's cool to be patient, bro. For real, for real. Trust me, it's cool to be patient. Like, if I could try to avoid any kind of as much drawdown as possible, then hey, you're not gonna be able to draw. You know what I'm saying? Avoid all of the drawdown, but like I said, this is probably gonna go down. But I'm not in right now. I'm not in right now. Right? I'm not in right now. I took this last night. I was in this last night. My entry was like 48 something, like something like here. Stop loss is above this wick, and then on take profit, I took profit for like 200 pips, almost a 1 to 3. So this was last night London session. So like I said, right now we're in New York, and it's crazy for anybody that's tuned in. I literally what's happening right now at this particular moment in this session. I said that gold could possibly do this, like probably about like 30 minutes ago. So it's actually trying to play out, but like I said, this 15-minute didn't close below for me to reclaim the level. If this does, then it should be a go. But if this doesn't, then we're still not entering, still waiting. And then my take profit one will be the next quarter point. Take profit two will be the second one. So that's basically what I'll be looking for, all right? So if you guys are just tuning in, whatever, please like this video. I'm giving out free sauce, free info, feel me, so we can push it out. So I caught this trade last night. For now, about 30 minutes ago, I just said that when price was up here, it was literally at this green candle. I said, if price comes back down and closes below this level, which is 40.25, which is 4,025 on a 15-minute time frame, there's a potential sell entry that could potentially happen, right? But for this candle right here, it did not close below it. So if you look, like I said before, it's literally some space here in between there. Like I needed to close below it for me to enter it. So for this candlestick, we have 10 minutes. So also waiting for closes will also help you avoid certain, basically I would say worse entries. It will help you get better entries. It'll help you avoid, losses. So look, so you can see how the market is pulling back right now. Like look, it's pulling back off this level. So now what can happen is, right, I'm looking for sells, right? But what also can happen is that this can just come back up here and start reversing, right? So that's why we want to wait for the candle closures, okay? But we know that the trend is bearish because we already determined that earlier in this call. But now what we have to do is we have to wait to execute and wait for our confirmation. But yeah, also, I also might just wait because there is interest rate moves tomorrow. So the market could possibly stall out for today and then make a move tomorrow or whatever the case may be. Well, we're just waiting for a candle closure possibly. But look, if you get a candle closure, we're gonna see. We're gonna see what happens with this candle, man. But yeah, so you can see like price is reacting off of the 40.25, but it didn't close below it. So that's why I'm saying it's good to wait for the closure of the candle. So let's say I just enter right now, the candle's still moving, right? You don't know if it's gonna go up, go down, whatever case may be. You want to wait for the closures of the candles, right? Going up, rejections, rejections. Now we want to see if this closes below. All right. But look, that's all the info that I got for y'all for today. So just be on the lookout for this. I'm gonna actually send this. Let me see. Copy link. I might send this in a free Telegram, free channel. Like I said, for anybody that's tuning in, I know there's a lot of people stopping in and out. What you could do is, like I said, in the description of this live, there is free community you could join. Well, I'm gonna send this chart actually to my community in the channel. Once my computer loads, it's slow as fuck. Max low as hell. Alright, bro, my Mac is moving so slow, fam. Alright, I'm gonna try to send this if my computer will cooperate. Wait, how did that look? Actually, yo, I actually don't like that. Yo, I'm gonna resend it. I don't know why it came out like that. Hold on. I'm gonna resend this. I don't like how the link came out. I'm gonna send it from. I'm use my desktop, my laptop. My fucking bro, my Mac is. I mean, my Mac desktop is fucking moving slow, bro. All right, let's see. It's gonna say disconnected on this one. It's because I'm on my computer session. All right, so okay, so it's gonna be 15-minute closure below 40.25 should be good for sales. Says first, I said big profit one would be 4,000. Would be 39.75. All right, so I sent that in there. I came back here, so I sent that in there. So like I said before, if this closes below, we should be good for some sell entries. But yeah, other than that, just gonna wait, see what's up, right? This closure, and then yeah, bro. So look, I appreciate everybody for tuning in. Like I said, don't forget to like, comment, subscribe, join the free Telegram, bro. We're gonna be going up, giving out free sauce, free info. Have some things I gotta do. But just be lookout on this for this trade. So it's in the chat. You can manage it, see how you know what I'm saying, if you want to take it, if not, so on and so forth. And then yeah, just go from there. All right, I'm gonna be doing more calls. Um, I'm trying to make it like where I'm gonna do mornings, afternoons. I'm trying to like mix it up because I know there's some people work in the morning, some people more free in the afternoon, some people free in the morning, whatever the case may be. I'm just trying to show love to everybody. So I appreciate y'all. I'm gonna catch y'all on the next session. Peace.